Good evening, good evening, good evening to all our like members, premium members. Welcome to another closing bell session for week ending 14th of February 2014. Happy Valentine to everybody, right? Right on time, 4:15. As usual, we will come to you with our closing bell for this week, as usual, which is a special Valentine as well as the Chap Gome for Chinese New Year. Let's look back at the notes that I have last week. Last week we did say the market's going to go sideways, what we have, and the weekly chart did go sideways. So that was what? That was on the 7th. You were expecting sideways around 1810 because we have the breakout here. Indeed, the market broke to just short of 1830 because we have the 1830 resistance. But what's great about the picture, you look at the top left hand side, is the major support. Right, the major support, which is hold at 1780. That was a critical point. If you remember 2 weeks back, I was telling some of the CIMB people where I met to and also Bill that if we ever broke through the 200 moving average 1780, that will point more downside to go. At the same time, you could see we also have the Dow Jones, which I will go into later. It also hold up at 200 moving average. So what does that mean? It means the 200 moving average has a very significant impact to determine the course of the signal, where they go to the downtrend or go to the uptrend. All right. So as this week, looking back, my notes are last week were 1808. This week we are back to 1830. Yes, we do have a sell-off here. Many of you ask, is this a sign of weakness? It's what I call temporary pullback. Now remember, market just can't go up in a straight line. We have 1, 2, 3, 4, 5 up bars and followed by reversal bar. That is, to me, it's still true. Now in VSA, remember, we actually look at the number of bars that is up that we permit, which is 3 bar up, 2 bar down, kind of arrangement. Then you will see it is so much better that way. So this is a nice just correction. Yesterday was a 7-point down. No issue with it, which is normal tendency of an uptrend up market. Okay, going to the foreign fund, which is no surprise, right? For as long as I could see since January. Is my sound coming okay? Just want to check again. All right, good. Right. So as far as you can see, back January starting on, nothing has changed. What we have here, pretty much red kind of thing. We did have a major selling back on 1st of February. I think that what explains the market sell-off that we have somewhere here. You could see it here. Now, I hope you all use this IVSA chart that I have for you on the so-called daily basis on our market opening. Right here, it tells you a lot because pay attention to this green bar here that you get this. So when the market just goes up, that tells you it's going to be pretty accurate. I was telling to one of the VSA members as well, of the CMB fellas I was talking to, that you have this red bearish zone here, and once it turns green, pay notice of it. It's quite accurate. The last time when it turned red, I was telling people this is where it's going to go downtrend. Now it's turning green, so we are beginning likely a period of stage 2, an uptrend from here onwards. Okay, pretty accurate here, right? So we got one up arrow, and market seems to be moving up nicely here. The daily foreign funds flows, as you can see, we are hitting a bit on the downside. The blue is the daily average. We are still on negative territory as far as we can see on the horizon, way back to October, right? And the accumulative selling that we have here pretty much taper off around 1.8 billion because each of these represent 1 million ringgit in here. Hopefully stabilize in here. Today, just a couple of minutes ago, I was looking at Bloomberg. They were talking about, hey, emerging markets has been oversold. Isn't it time for the foreign funds to step back in emerging markets? As I said before, there are two types of emerging market, the type A and the type B. We apparently fall under the type B, and however, for the greater of commonality and the way they categorize it, we are considered as emerging markets. We are considered one of those what we call a low beta emerging markets, which should put us in the better quality. If you want to look for quality emerging markets, definitely Malaysia is grouped under that. And of course, a slightly better quality would be Singapore, because Singapore happen to be in the proximity of ASEAN region, right smack right in the middle. So that's why you have it here. Okay, so we done that one. Now let's look at the regional market, since we done the foreign market. Now look at the foreign. What I was going to say here is the SGX. Now I apologize to all the like members listening. Now last week I didn't do the snippet, which is the short one. However, you guys got it. Partly it's because I didn't have the time to pass it on to the video rendering guy, which actually does cost me some time because I employ him on a retainer basis. So now this week, if I have time next week, I should have time because I was very busy preparing for this weekend. I think the toughest preparation is actually, communicating with you who had paid and who have not paid. And luckily I got a girl to help me out on that one. So that seems to be good. So back on the Straits Time here, you could see this is the daily chart. You have this extreme breakdown. We have a sort of triple bottom support 3000 and the breakdown here. So this is where people saying, look, this market's going down, looks like it's not going to have an end. But guess what, if you switch to a weekly chart, this doji tail, it's superb. I can tell you that. Sometimes you don't see it on the daily chart because it is much shorter time frame there, but on the done the, let's look at the CPO now. Now CPO was a nice one in here, broke back the 2600 in here. This was a nice 2-bar reversal. We got a nice 5-day line change. Think to go long actually. Go long at this level. Go long at CPO. Okay. If it does break up the around 2610, I think 2610, probably take profit, you know, around at 2660. Okay, just a short one here. You might see a breakup to the upside in here. Now remember, the next one I will go on is the gold and the ringgit. Ringgit has definitely weakened a lot. I mean, those of my clients who park their money in SGX definitely benefited. As I said, you know, if you go back the last 10 years, measuring the Sing dollar currency against Malaysia, you got a 5% so-called depreciation of ringgit against Sing dollar. It's always good to park some money in Singapore. Countries, okay, this is where I will go through. Next one is the FX. Okay, so here we have the US dollar against ringgit. Oh, sorry. Okay, so that tells you, you know, we are hitting the old QE tapering. Remember the QE tapering, that the time where foreign funds were leaving? That's the time we actually hit 3.3 side, and now we are at this level. So going forward, hey, this doesn't look good. 3.4 akan datang, my friend. So park some money in Singapore. We might hit 3.4, 3.5. So that's why you can see CPO is going higher. Anytime when the ringgit is weakening, makes CPO prices a bit more attractive compared to the closest competitor, which is the soya oil. So that's what palm oil will do well. We should translate to a better plantation. Okay, a weaker ringgit will tend to hurt because Malaysian being a Malaysian export. So I do think there's some support also for the rubber glove industry, a weakened ringgit in here. So wait for the break at 3.35. Of course, those of you who is going for a holiday, 3.4, 3.5, very expensive for holiday. But for the exporter based like rubber glove and all those plantation, this is good. Now a stronger ringgit tend to hurt the economy of a country. Okay, that's how you see it. Okay, now going back to gold, a nice, you know, what we call a cup and saucer. Okay, we got a nice support here at 12,000 level here. We got a nice breakout at 12,600 levels in here. You know, like it or not, is this news about QE tapering saying there will be another QE tapering coming in as Janet Yellen is coming in. But guess what? Gold is going higher. Now make no mistake again, gold, physical gold prices are in huge demand. As a matter of fact, Bill told me, who is our gold correspondent, said that in China, physical delivery is $200 more than what you see here. So if you want to take physical delivery of gold, will be you have to pay 1,400 level in here. In India, it's about another 100 because there is a shortage of gold. Now remember, production gold prices is at 12,000 in here. So at this level, a lot of gold production prices cannot maintain because of the cost at 1,200 level in here. So there's no incentive for them to produce gold. But there is a huge demand for gold. So technically, if the demand is there, how can gold prices stay low? So it's just, that's what a lot of news, if you read through King's News, KWN King's News, just Google that, you'll see this commodity market is all been manipulated by the central banks in their best interest to keep their currency strong. In this case, with the QE tapering, that's why US dollar will do well this year. Okay? A good bet is actually US dollar in here. So some of you who has a US stock, it's also good too. Don't be too negatively on the US dollar against ringgit. We can do more for our Malaysian ringgit in here. That's all going to be see how this interest rate raise that we have. But I was kind of surprised to see the possible interest rate hike on the second quarter, where our ringgit actually get weakened. Normally when there's an interest rate hike, ringgit will strengthen, but it's not the case in here. Something it's more going out in here, but that one I'll leave it to the economists to come up with it. If I do find new information, I will share with you on the premium subscription. Okay, so we have that one. So we talk about the economics, gold. Okay, the foreign funds. Okay, foreign funds, which is the last topic here. Foreign funds, no good. You can see the rate on the right side That tells you it is still trending on the downtrend. Red is the 5-day moving average, a rollover. We are almost at minus 13 billion, or 1.3 billion on the net selling in there. There hasn't really been buying. If you go as far back to October, every day is so red, except for the last 2 days in 31st of December where foreign funds came in. As I said before earlier on my posting, these were mainly due to Thailand being the situation that they have with all this crisis. I think there's a curfew, right? It's been called martial law. So a lot of foreign funds are leaving it. But problem is they do see a recovery. This is only temporary in Thailand. Now remember, Thailand has been beaten down a lot, so they do see a lot of potential for Thailand, and also valuation. They're much cheaper compared to Malaysia. So they will just wait it out, and once this whole Yingluck versus Snippet, which is the opposition. But again, remember in Thailand for the last the last 42 years, they have 40 coups in the last 42 years of Thailand since they gained independence. So it's almost once every year. Average it out, okay? So it's no big deal over there. Okay, now we're going to review the stocks that we have last week. Let's look at last week was 16th of January. Getronics. Now last week Getronics, we have this nice line change in here. Now if history has any so-called predictive power, we have a 18-day line change also in end of October. The market really moved sideways for almost 1.5 months. Now the same might just go for this one in here. This low was a nice spring here at 323, but it did touch at 329, closer to 325. Who knows? The market will really test before it go further. A lot of time it just congests sideways and break. Now remember Usman, we talked about it earlier. It break, then possible good news coming in here. Getronics is actually, I believe it's a manufacturing play on semiconductors, Getronics, which is similar to Vitrox. Vitrox has broke higher in here. Volume is definitely low, so let's hope this is sign of strength or test in the background. Put your stop loss around maybe $3 or 305. That's what I would do. Things don't move that fast here. Okay, Muhiba, the nice 18-day line change here, took out this $3. He didn't take out $2.70. That was the part. And since then, you've been having a 4-day sell-off. What we see here, 240. Stop loss being 220 in here. Let's again come back to see. Remember, just like MK Land early on, we pick it up sometime in 3 months. It actually congests for 3 months. We finally broke higher. So if you are the conservative side, look for those who pay a dividend. Now some of these stocks have not really gone through whether they pay dividend or not. Use the magic scanner. Look at Mohiba. If they pay a dividend, then you might want to consider holding it longer. Okay. For the PWC stock, which is a penny warrant counter, highly speculative in nature, almost gambling, not for your average guy, but average investor, but you can make a lot of money at the same time. Now Getronics last week, which is we have 5 working days or 3 working days, right? Which is here, 20th, 16 was here, right? This is what we thought we saw. It broke down in here, doesn't look that good in here. Let's say I would give it maybe around 45 cents. We do break, time to exit out for Getronics. Not all trade works, okay? G Mutual, that's right. G, what do they do? G Mutual. Insurance? No. Okay. It might move sideways for a while. I did see the volume in here. Okay. Next one is for the Singapore one. Is NSL. That's right. NSL. Which is what company is that? Is NSL. Okay, let me just bring it up. Yeah, 1, 2, 3, 20th. It did break up, move sideways in here. Nothing much to show off again. Okay, so going next week, which is this 24th of January, we have picked this here, right? First one is this called CB Industry. Okay, CB Industry. It's actually they do build a lot of the milling plants for plantation. Pays a nice dividend in here. Did break up to the new high. Hey, nice one today, you see? 2-bar reversal at just today closing. Okay, so that tells you the story is not over for CBI Industry in here. Still in a nice uptrend in here. I like this. Somehow support did coming towards the end. Okay, another stock we have is multi-purpose capital. finally breaking back to the 200 moving average, trying to conquer the old high at 177 in here. Let's see next week how it does. It might come back and test 142. Alright. For the PWC stock, for some reason I like TRC, which is trading around 55 cents. Did try to break 58 cents. Guess what? Fresh seller came in and said, look, trying to break 200 moving average, let's sell first. And today, on low volume, close back at 54 cents. It's not as well manipulated like AT or XLD. You can see XLD, every day got someone support one, right? Because the sellers has been flushed out, the smart money came and supported, and then finally, I'm not even sure where is XDL today. Let's see XDL today, which is one of PW stock. It's not for the so-called weak heart. If you have a weak heart, no courage, and don't touch this kind of share. Just sit along and watch, just like watching fireworks. Okay. Now 30 cent. Wow, 60 cent, 30 cent. It is 50% loss already. All right. Now from 30 cent to go back to 60 cent, I don't think you ever go back up there again. No more unless the Prime Minister or the Premier China come back again. Okay, fat chance. Okay, this one in here. Once in the 10 years. Okay. So if you miss out, if you got in 60 cent, the peak was somewhere done in mid-December. Okay, pay note of that. So that's all we have for the closing bell for week ending, 24th of January. So it's a summary in here just to recap. Hey, market. Okay, there's some voice in here. Just want to recap back where we have. We are seeing some sort of test in here. Again, the test need to be really kind of solid in here. The volume is definitely lower than two previous parts. Another test. Now remember, test is always the best because it forms a support at this level is 1800. However, if you have a failed test, meaning the market will close below, then it becomes pushing through demand. A failed test, breaking of the spine, it becomes mushroom on the top, a sell-off, to retest the 200 moving average at 1780, which is possible, right? And at the time, you want to see whether it's a good time to buy. Again, Chinese New Year comes in. We want to see the interaction and the news coming in here. If that falls, next support, which is a 7% down from 1800, will be 17,550 level in here. So I'm doing a lot of projection now to the downside because at this moment, trend is still pointing down. If you go back to my IVSA chart that I post on every Friday in here, it is still red. Okay, so far it's been right. So just wait for it to turn green. Okay, if it turn green, but good news, you have one green already on the right side. That tells you the test. More green, much better off. Okay. So that's all I have, folks, ladies and gentlemen. 4:50. It's time for the weekends. For me as a Chinese, so a lot of cleaning up to do, a lot of spring cleaning up to do. For those of you who is driving back safely, thinking of taking the week off, so drive back safely. You can still catch us on the closing bell, being on the webinar. For those non-Chinese, I wish you a good rest, a good holiday. And if I don't see, there won't be any Friday closing bell or whatever the case is. If I have time, I'll probably do one on Thursday, but then Thursday is 30th day, makan day lah. If I do it, my family member will probably just take the holiday and come back next week. All right. So with that, have a good rest. Thank you for listening and good evening. Bye bye.